Okay, there is the online tutorial class on Unit 7. Focus on the profit tax about the deduction of the expenditures. Now for this tutorial unit, we have 4 questions in total. First of all, we will focus on the 2 questions that uh, you are required to submit and present, and that is question 3 and 4. Okay, now we look at question 3 and 4 first. Okay, question 3 is focused on the interest expenses deductions. And there are 5 different kinds of the loan related to Mr. Borrower. And there is an incorporated trading company in Hong Kong. And that's why there should be a Hong Kong company, and that will be subject to the Hong Kong profit tax. But for interest expenses deduction, you should be fulfill a lot of the different sections in the Inland Revenue Ordinance. Otherwise, it won't be allowed to deduct. Okay, for the first loan, loan A, the bank loan money will be used to acquire an office, which is to be used by the company in its trading business. The office will be pledged as security for the loan. Okay, for answering this question, we should focus on those sections that's related to determine whether the interest is allowed to deduct or not. Basically, the concerning loan interest should be related to the company production of the accessible profit. Okay, that's why there is a general deduction rule. Okay, and that will be related to section 16.1, section 16.1a. And by looking at that, it is to acquire an office for the operations, and that's why that is the loan is being used for the purpose for the company to produce accessible profit. The first section is fulfilled. And then the second one will be the sixth condition. And among the 6 conditions, you will find that section 16.2d will be satisfied because the loan being obtained from financial institutions. And also, there is not being secured by a deposit. And that's why even we look at the subsection section 16.2 capital letter A about the secured loan test, it will be satisfied because there is no such arrangement in place such that the interest will be received by the company or the connected person. Okay, that's why for loan A, the interest being paid by the company is allowed to deduct. Okay, the second one, that will be the loan. Similar, that is also used to acquire an office, and that is being rent out by the company to earn rental income. And the bank loan will be secured by US deposit paid with the same bank by Mr. Borrower. Now this one is similar, although the office is to rent out, to receive rental income. But no matter how, you will find that that will be also subject to Hong Kong profit tax because there is a corporation and rent out properties, receive rental income will also subject to profit tax. Okay, that's why that is also included in the production of the accessible profit of the company. And that's why there is fulfill this first section, section 16.1, section 16.1a, the general deduction rule, being included in the production of the accessible profit. Okay, then we'll look at the 6 conditions, whether that will fulfill those 6 conditions or not. Okay, basically you will find that it will also similar, section 16.2d, and that is obtained from a financial institution. And also you will find that there is not being secured by a deposit. That is being secured by a deposit, but you will find that the loan is being secured by the deposit being provided by Mr. Borrower. Mr. Borrower is the director of the company, is a connected person. And because of that, it doesn't satisfy the secured loan test. It doesn't satisfy. Okay, because of that, really depends on how much the deposit is being provided by Mr. Borrower. If the amount is smaller than the loan amount, then what Mr. Borrower received the interest, uh, is tax-free. Okay, assume that it's tax-free because it's an individual receive interest out of a deposit, and then that will not be subject to Hong Kong Profits Act. Because of that, this portion of the interest received by Mr. Borrower, and that will be similar to the company. The company will not allow to deduct this amount of the portion. Okay, and that's why the concerning amount will be reduced uh, in a proportion to what is the amount that is being received by the connected person that is tax-free. Okay, that will be the discussion you should provide. Then loan C, and the bank loan will be also required used to acquire an office which is being used by the company associate rent-free, and the office will be pledged as security for the loan. Now, by looking at this one, although there is acquire an office, but is it used for the company for the production of the accessible profit? And you will find that there is rent-free and to the company associate. And because of that, it doesn't provide any profit, accessible profit. And because of that, that doesn't satisfy the general deduction rule. Okay, that's why this one that will be not allowed to deduct any the interest related to acquire this office. And although it doesn't secured by any loan, but no matter how, okay, it is not allowed to deduct any. Okay, loan D. Interest incurred on the loan satisfied, and you will find that the loan, the bank loan, will be used to acquire residential flat, which is to be used by Mr. Borrower as the company director, and the loan will be guaranteed by Mr. Borrower on the personal base. Now look at this one. Now the residential flat is not for the company use, but for the company director use. Now, this is treated as what? Treated as a fringe benefit being provided by the company to motivate the director to work harder for the company. Okay, that will be treated as a kind of the normal fringe benefit being incurred by the company provided to their senior staff. Okay, that will be treated as being incurred in the production of the accessible profit, and that's why the general deduction rule is fulfilled. Okay, and then by looking at that, and we need to look at whether the interest is deductible or whether there is any interest are being secured, any secured loan is being provided by any connected person or any interest fall back to the connected person. By looking at that, there is no such arrangement. The loan is being guaranteed by Mr. Borrower on a personal base. Now, personal basis is not a deposit. The key thing is that whether there is a deposit provided by a connected person in related to section 16 2A, 2B, 2C, and that's why there is no deposit being used to secure. And also, even there is a Mr. Borrower is a connected person, but that is not a deposit, right? It's a personal base. Okay, that's why the concerning the loan interest will be allowed to deduct. Okay, it's fulfill those things. Okay, the last one is more complicated. There is a loan being used to purchase the company trading stock, and part of the loan will be a sub-participant by another company, Hong Kong company, which is being owned by Mr. Borrower, a connected company, okay, connected person being controlled by the same person, and the sub-participant portion of the loan will be secured by original bank loan provided by the company. Now look at this one, and you will find that there is used the loan to acquire the company trading stock, and that is being used to produce the accessible profit of the company. General deduction rule is fulfilled, section 16.1, section 16.1a. But okay, and the sixth condition also fulfilled. Okay, and you will find that fulfill one of the item, and that is been related to section 16 2D and 2E. Okay, and by looking at section 16 2E and 2D, the six conditions, the E one is to acquire the trading stock, right? Okay, that's why that you fulfill this part. And and the F1 that is the interest is paid by the company on a debenture or similar marketable instrument listed on Hong Kong or any other trading exchange, stock exchange. Okay, and by looking at this one, and you will find that the company acquired a trading stock, and there is no problem. What is the problem is that is being financed by another company. There is a related company, okay, being controlled by Mr. Bolo also. That's why it's a connected person. And also the sub-participant portion of the loan are being secured by the original bank loan provided by the company. And that's why that is being secured by a deposit, right? Okay, that's why when we look at the section 16(2)(a), secured loan tax, that may not be satisfied because that is being secured by a deposit, and also it's come from a connected person, Mr. Borrower or associate, right? Okay, that's why for this one, really depends on the sub-participant portion of the loan being provided by the associate. Is it smaller than the loan amount being followed by the company or not? If yes, and most likely, and the proportion of the interest that is allowed to deduct will be reduced proportionally. Okay, that's why not the whole amount will be allowed to deduct, or not the whole amount will not allowed to be deduct. Just just reduce a portion. Okay, that's why the let's say the amount being paid by the company is 1 million, this is the interest. But on the other hand, when there's a participant portion by the associate, let's say it's just let's say it's 400,000 only. Okay, that's why this $400,000, this portion will not be allowed to deduct because this $400,000 is tax free, and what left behind is $600,000, which is nothing related to this sub-participant deposit secured loan, and then that portion will be allowed to deduct. Okay, that's why that really depends on what is the sub-participant amount being provided by the associate company. Okay, then the concerning interest expenses that is allowed to deduct will reduce proportionally. Okay. Now we look at the question 4. Okay, question 4, it gives you a CTF company, and that company is carry on business in Hong Kong. Okay, that's why no matter how, this company will be subject to Hong Kong property tax, but we need to look at each of that of the item of the company. Okay, by looking at that, there is the income statement of the company being prepared. Okay, now you are treat yourself as the assessor. Okay, and then you work it back. That's why we will start with this figures. Okay, start with this figure to work it back to adjust this loss of the company for the year. Okay, don't start to prepare an income statement again. Okay, and then that's why based on that there are several items in the income statement. Okay, and I also provide you some additional information, not 1, 2, 3, and so on. Okay, now we look at each of them one by one, and then whether we should adjust it or not. Okay, then we look at the note 1 about the sale proceed of the technical know-how, and it have a gain 100,000. Okay, and also you mentioned the purchase costs have been allowed to deduct in several years before already. Okay, now the technical know-how are being shown away, and you get back more than the original cost, and the gain is 100,000. And because of that, the company have already included 100,000 in the income statement already. But according to the ordinance, and you will find that concerning sale proceed will be treated as trading receipt, right? Okay, that's why but limit to the original purchase cost only, and because of that you have already included 100,000, but still because originally you have deduct 1 million, right? When when the company acquire this technical know-how, they pay 1 million. And that's why this 1 million whole amount will be treated as trading receipt, taxable. Okay, that's why what are the difference? 900,000 haven't been included. That's why you need to have $900,000 add, okay, add back, okay, that will be taxable trading receipt. Okay, then the second one is the compensation receipt. Okay, compensation receipt is about Note 2 and 140,000. But looking at this one, it include a free item, and that is a compensation received from a customer for cancellation of one sales contract. Okay, this one just one of many contract. That's why it's revenue in nature, will not a permanent loss of this contract. That's why that will be taxable. No need to adjust any. Okay, the second one, compensation received from the loss of trading stock, revenue in nature, normal. The normal treatments. No need to adjust any. Okay, and then the third one and compensation received from the loss of the motor vehicle. Now you will find that this figures is come from a motor vehicle, and the motor vehicle is a capital in nature item. Okay, that's why for this one it won't be taxable. Okay, it won't be taxable. Okay, that's why this one should be adjusted. Okay, then another item related to the income statement, the notes 3, is about the dividend received from unquoted share. Unquoted share. Okay, look at the information given. And with the two items. Dividend from the share listed in Hong Kong, dividend from a private company in Hong Kong. Okay, and for this one, as we all know that according to Section 26, dividend is non-taxable in Hong Kong, no matter that is listed or non-listed, okay, private company. And that's why the whole amount should be adjusted, okay? That won't be taxed. That won't be taxed. This 110,000, but the company have already included this dividend as one of the income. That's why we need to, okay, exclude it. Exclude. That's why we need to deduct, okay? And then the interest received, and that is about Note 4, and 800,000, 80,000. Okay, that's why for this one, and that will be the interest on the loan to our customer, 20,000, and then interest on the fixed deposit with a bank in Hong Kong. Now this one, okay, because this is not a financial institution, okay, that's why, and for this one, and you will find that the interest on the loan to a customer, okay, you lend money to your customer, and that's why that will be part of your trading receipt. Okay, that will be taxable. That's why this amount will no need to adjust any. But for the second one, interest on a fixed deposit paid with a bank in Hong Kong. Now that is out of a deposit. That interest is out of a deposit according to the interest exemption order 1998. That should be excluded. Okay, that's why we need to exclude this 60,000. Okay, that will not be taxable. Okay, and then we don't have any other item to adjust on the receipt. Okay, we have already discussed all that. Now we'll look at the expenditures, whether that is allowed to deduct or not allowed to deduct, whether that should be add back or whether we haven't taken into consider any. Okay, that's why for the first one is about the salary and the allowance. Okay, there is no information about additional information. That's why that is the normal expenses of the company allowed to deduct. No need to adjust any. Director remuneration, the same, nothing to adjust. It's the normal expenses of the company. Okay, okay, rent and rate. Okay, but looking at this one, it's about Note 5. Okay, Note 5 is about the rent for the office permits, rent for director quarter, rent for office permits. All this is allowed to deduct. Rent expenses, normal expenses of the company is allowed to deduct. No need to adjust any. No need to adjust any. Okay. Okay, then telephone, water, electricity, normal expenses, no need to adjust. Okay, interest, note 6. Now this one I'll require two to explain further in part B. Okay, that's why this one interest by looking at note 6. Now by looking at that, you have two. One is the interest paid to a director, paid to the director of the company, 52,000, and the other one is 116,000. It's about the loan received, the interest paid to a loan, paid on a loan from a local bank. The loan was secured by the director deposit, which was smaller than the loan, and the director received 47,000 from the deposit. Now for the first one. This one is not a financial institution, and that's why also the director is a connected person, and that is not related to the company business, and because of that, it doesn't fulfill those requirement of the interest deduction rule. Okay, and that's why you should discuss all the deduction rule of the interest, whether that is included in the production of the assessable profit. There is a general deduction rule. Is it fulfill the sixth condition? Surely that should not fulfill, right? And also the section 16.2 A, B, C, whether there is a secured loan test fulfill or interest fallback test fulfill, because director, okay, is a connected person. Surely this amount will not be allowed to deduct. I bet, okay, I bet this 52,000. Other than that, for this one, and you will find that because the loan being paid is being get from a financial institution, okay, in Hong Kong, and surely the interest paid to this financial institution will be taxable, but that is being secured by a connected person. That is the director deposit, and because of that, and also the secured deposit is smaller than the loan, and the director received this amount. That's why, uh, because of that, the concerning deduction will be reduced proportionally and reduced by 47,000. That's why this $47,000 will not be allowed to deduct in proportion on this one. That's why the original is 116,000 should be reduced by 47,000, because 47,000 is non-taxable when the director received this amount, because that is out of a deposit, and that's why the concerning company just allowed to deduct reduce the interest deduction proportionally. Okay, then that will be another one will be related to the note 7 bad debt. Okay, about this one is about the bad debt, and by looking at the item in this T account and trade debt written off normal expenses allowed to deduct, no need to adjust any. Loan to a customer written off normal bad debt expenses, no need to adjust any. What you need to adjust is about the beginning balance is 40,000, but the closing balance is 70,000. Okay, that's why there is an increase in the general provision. As I have already mentioned, when there is an increase, you need to add back the difference. Okay, increase by 30,000. That's why you need to add back 30,000. You need to adjust 30,000. Okay, it's not allowed to deduct. Okay, then now we look at the other, and that is the legal and professional fee, note 8. Now, note 8 about the audit fee, no problem, is allowed to deduct normal business expenses. Collection of trade debt also allowed to deduct, but this one. Okay, handling of investigation by the Inland Revenue Department, okay, and that is not allowed to deduct, because there is a dispute between the company with the IRD, and this legal expenses is not allowed to deduct. Okay, that's why that amount should be added back. Okay, then now we look at another one that will be about the repair and maintenance. Note 9 about this one. Okay, and by looking at this one, and that will be including two. One is the renovation, okay, and 450,000 you deduct in full, but you will find that according to section 16F, just allowed to deduct 1/5 in the coming 5 consecutive years. That's why you need to add back this portion. you need to add back because you deduct in full, right? Just allowed to deduct 1/5 only. That's why you need to adjust this amount. You need to add back, okay? The general repair of the fixed assets, no problem. That is allowed to deduct. No need to adjust any. Okay, then look at the other one. That will be about the MPF. That is the contribution to the MPF, note 10. Okay, that was about 2 items. Special contribution. Now, this is allowed to deduct, but according to section 16A, okay, and you will find that it's just allowed to deduct also 1/5 of the portion in the coming 5 years. That's why you similar treatment. You need to add back this amount because you deduct in full, right? Just allowed you to deduct 1/5 only. That's why you need to add back this amount. The annual contribution, no problem. It's allowed to deduct. No need to adjust any. And also, you also mentioned it doesn't exceed the 10% or even doesn't exceed 15%. No problem. It's allowed to deduct. Okay. Then the donation, note 11. Okay, and by looking at the note 11, there are 2 items. Cash donation to community chest or original that is allowed to deduct, right? But we need to add it back in order to determine the maximum, whether that will be over or not. Okay, that's why we need to add back this 860,000. For this one, now you will find that the donation of the prize for the lucky draw for the staff at the company annual dinner. Now this one is just annual. It is just a accounting treatment. Put it in the wrong account only. I can say it's the fringe benefit provided to the staff. And this is an expenses of the company is allowed to deduct, and it's not a donation, okay? And that's why this one you no need to add back, no need to adjust any. What you need to add back is just the 860,000. This one is allowed to deduct only because there is a fringe benefit provided to the staff, to the employee, and that is allowed to deduct. No need to adjust any. Okay, and then the insurance, no adjustment and nothing additional information. Travel and transportation, note 12. Okay, that is related to several trips. Overseas business trip, no problem, allowed to deduct. 3 days Taiwan tour for the company employee. Fringe benefit for the staff, no problem, allowed to deduct. Transportation of goods to customer, normal expenses. That's why no need to adjust any. No need to adjust any. Okay, the last one that will be the motor vehicle expenses and note 13. Okay, there are several. Okay, petrol, normal expenses, repair, normal expenses, parking charge, normal expenses, but traffic fine, not allowed to deduct. Okay, penalty charge, no need to not allowed to deduct. Add back. Okay, and then the 14. Okay, and that is about this expenses. Okay, profit tax pay. This amount not allowed to deduct, and you should add back. And that is according to the section 17(1)(g). Okay, and the profit tax pay to the Hong Kong government according to the inland revenue in Hong Kong, the profit tax payable amount is not allowed to deduct. Okay, that's why you need to add back this amount. And then the property tax paid for the director. Okay, and that is nothing related to the company production of the accessible profit of the company. That's why this amount should be added back. Okay, it's not allowed to deduct any. And the other allowable expenses for the tax purpose, no need to adjust any. Okay, because there's mentioned allowable. Okay, and also finally, and the assessor mentioned, okay, the statutory depreciation allowance for this year is 141,000. That's why this is the amount related to the machinery or those things, and that's why this one is the official one. Okay, it's allowed to deduct. Okay, then we will adjust those figures. That's why for the tax computations, profit tax computation, you just work it back. And remember to write down several key things on the top. One is the company name, year of assessment. Also, you should write the base period. And because different company may have different year end. Okay, that's why you should write it clearly about the base period. and this one is year end up to the 31st March 2019. Okay, that will be the key thing you should write on the top. Now, and you will find that for this profit tax computation, we will start with the income statement, the last figures, the loss per account or the profit per account, right? Okay, that's why we'll start with this figure and then adjust those things. First one is the technical know-how, the difference, okay, haven't been included, you should add. Then those items exclude income, including the capital in nature uh, compensation from the motor vehicle, you need to add back. Dividend, okay, exempted. That's why you should add it back, exclude, and that will not be taxed. Uh, Deposit, same, interest on deposit, okay, exempted, interest exemption order, okay. And then the other non-deductible expenses I already mentioned, interest paid to director, interest paid to the local bank, loan to the customer, increase in the provision of the doubtful debt, professional fee of the investigations, renovation, you add back this portion, and also special contribution to the MPF or recognized retirement fund scheme, you also need to add back these portions. Donation, you add back the pure donation amount first, okay? And then traffic fine, not allowed to deduct. Profit tax, property tax, paid for the directors. Depreciation, now that is the accountant calculation, okay? Not allowed, you need to add back first. Just the statutory depreciation amount allowed to deduct. Okay, then after that, that is the statutory depreciation allowance you may deduct. Okay, 141,000. Okay, now after we have worked out these figures, and we will base on that to estimate the maximum donation amount that can be allowed to deduct 35%. Okay, the maximum is this amount, as you will find that the company donate the amount is not more, or is more than that. Okay, more than that. That's why limit to this amount only. Okay, if not, then the actual amount. Okay, and lastly, and then you work out the accessible profit, and this year 16.5%, and the company are required to pay 175,568 profit tax to the Inland Revenue, to the Hong Kong government. Okay, and then the discussion on those items I have already discussed about the dividend. You just mentioned that is being mentioned by section 26A and not taxable. Interest expenses, two items. One is the bank loan interest that is included on a loan borrowed and related to that, and mentioned about the interest is paid to a directors. Okay, not deductible because the director received the interest will not be taxable. That's why it doesn't fulfill the security loan test, and also the amount will not be allowed to deduct, and also none of the 6 conditions fulfilled also. Okay, another one will be related to the loan being secured by an associate partly, and then you should mention about finally this will be the amount will not be allowed to deduct because this amount will be received by a connected person, the directors. Okay, and then the last one that will be related to the cash donation to the community chest, and you need to discuss detailedly according to the marks allocation. Okay, if that is just 1 mark, then you just simply provide a simple answer. But if that is account for 5 marks, 10 marks, then you should provide more detail. Okay. Okay, and according to section 16D, okay, the payment should be a donation of money to a charitable institution, and that is exempted from section 88. And also, that should be pure donations, and the donation amount should not be less than 100, limit to 35%, and no double cam, and then that will be also those things you should mention. Okay, make it simple, and then really depends on how much mark it worth, and you answer the proportion in the marks allocations. Okay, I don't want to further to discuss on the question 1 and 2. I will let you to read it by yourself. Okay, that's all for this tutorial questions. Okay, if you have any question, you may ask me through the chat room.